Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex weekly charts and analysis. Today's May 24th. At the I can't say very end. We're basically at the end of May, but next week is actually May 31st. So, as it is, we're heading into a holiday week. It'll be a shortened week here. And again, some crazy news this morning. Not necessarily something that every single week we look at or every single month we look at and say, wow, these days are the biggest moving days. But I think the market's at a little bit of a heightened sense right now. And again, we've had some crazy movement with the pound. The indices are not looking great today. A little while ago, the NQ was down 3.75%, which is not out of the ordinary, not too much out of the range. But again, that's quite a negative day for lack of really any really mainstay news. So let's just dive into things. We got a lot to cover today, and I want to make sure we can get everything in as possible and still be respectful of your time. So for those of you that are new, again, welcome. Every week we have some new people come in. I love getting the emails from the people that are new that have some questions. I can always tell new people because they'll say, "Hey, you said Harry Potter. What? I'm confused." We talk about it enough on the channel. So again, if you're new, don't hesitate to ask. At the end, I'll actually give you my email address, and you can email me directly and kind of figure out what's going on. But for those of you who don't know me, my name is Brian. I'm the president and CEO of Keep Trading Simple. I'm not a Nadex employee. I have been partnered with Nadex now for just over 5 years and doing different things for them, writing articles. I've done some online articles for them. I've done education summits for them. I do these analysis sessions. And then I'm actually a co-host of a morning show that we do on YouTube for Nadex. So been around for a while. Many of you know me. I'm a price action based trader. For those of you that don't know me, I focus on really reading candles and kind of seeing what's going on in the markets. I know how to use indicators. I will throw them up on the charts occasionally to kind of not poke fun at them, but again, use them maybe in a little bit different way than people are accustomed to. I try to keep things as simple as possible. I love analyzing strategies. So even if you just want to talk strategies, email me. I love talking strategies. Created a number of different programs that work with Nadex. Again, 5-minute binary courses are popular. 30-minute trader, high volatility trading was a big one. A parabolic retracement course, it's not actually listed in here, but it's awesome for news trading as well. And actually one of my favorite ones. And then I actually have some like things like the Harry Potter trade. I've only actually ever mentioned, I don't have the classes on it. I only talk about it and kind of teach the rules behind it at these sessions. So it's kind of almost like a Nadex only strategy. That's the only place that I've ever put it anywhere. So I have been trading since about 1999. I'm a Y2K trader. Some people, if you don't know what Y2K is, you're definitely on the younger side. You're probably a millennial, right? But everybody kind of older than me would know what Y2K is. Back when the world was supposed to end, but it didn't. I've traveled all around the United States as well as Canada, kind of helping traders learn how to do the market. I did work for one of the big 3 banks in the advisory division. Learned a lot about bonds, kind of got to see really what the quote industry looks at and what industry trading is. I can say that I did work on Wall Street, the actual Wall Street itself. I didn't actually work on the exchange. I used to walk past it. The New York Stock Exchange, especially at Christmas, is such a cool place. If you guys ever can go to the financial district in New York, do it, especially at Christmas. I actually lived not even a full 2 blocks. It was just under 2 blocks away in a great little apartment there. It was awesome. I did that for about 2 years. Again, happy hours in the financial district, hanging out with floor traders. I actually taught a couple floor traders how to trade, or kind of the new methods of trading. Really fun stuff. Met my wife actually in the industry. Again, we live in Maryland now. And again, this picture is so outdated. I have a beard that's white, basically. I went from like a half reddish beard to a half white beard. Melissa basically is the only one in the picture that looks the same. The girl has hair down to her butt. She's going to be 4 in a week. The boys, they're like twice that size. They're both about almost Melissa's height at this point. And there's a little one. You guys haven't seen Kip on stream. He's been there a few times. He's about to be 8 months, or I guess he's almost 8 months old. So yeah, everybody's getting big. Time is flying, but again, that's COVID. So before we touch the charts, I do want to cover a Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost to enter the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex, if you guys didn't know, is a registered trademark of Crypto.com. I'm anxiously awaiting some major updates from them. Again, typically when you acquire a company, it takes a little bit of time to learn the processes and come out with new things. I'm so excited for that. I think with everything going on right now, and again, we see the crypto market and just blockchain technology and digital, currencies out there all in the forefront. I think the next year is going to be like an amazing time to be associated with a company this big. Um, no announcements yet, but I feel that they are coming sometime, probably soon. Like I said, just timeline wise, when you acquire and when they come out, I think it's going to be a fun time. I'm very curious to see kind of what the changes are and really how do we incorporate them into the channel. With that said, let's cover the agenda for today. So, upcoming news events, we cover this every week, and it's really kind of where are the potential hotspots lurking. Now, I say potential because, again, news events, they're not always the biggest mover, but a lot of times, and again, if you look at this, you can go back and look at the history. I use a site called Forex Factory. Um, you can see kind of historically how often the forecast is actually what the actual number is. And when it's not, there typically tends to be, major movement in the markets. There was today, particularly in the pound. And then even really some of the indices right now are based off of what's going on with, the PMI reports for the U.S. So again, it's an easy way to look and kind of plan out your week. If you're not doing it, you're absolutely missing out. Even if you just picked 5 news releases a week that you were going to trade, again, it's a way to hold yourself accountable in trading the markets. After that, we're going to break down the indices. We'll cover kind of what's going on today and what we could look for the rest of the week, particularly tomorrow. I think tomorrow afternoon is going to be a big one to watch out for. Just to get some of kind of the guidelines of what we're going to hear from the Fed. Then we're going to cover Forex. Again, Forex, I mentioned the pound, major movements. Actually, there's one of the major currencies, not major, but like one of the larger currencies tonight actually has they're raising their interest rate by 0.5. It's not an Nadex traded pair or product yet. I don't know if it's coming in the future or not, but it will have some repercussions and other things like the Australian dollar. So again, we can look at that. And then we'll cover commodities. Commodities is a hotbed. Yesterday morning, we were talking about how it's finally nice to get a little bit of a pullback in natural gas. And then natural gas exploded and went up and grabbed our target. It just went crazy. Today's a little bit more tame, thankfully. But yeah, so there's all kinds of stuff going on. It's just every day seems like there's something else. And again, it's month after month or week after week, it's amazing how things change around where, forever, the beginning of the year, every headline was dominated by what was going on in the Ukraine. And now the headlines are completely different. I mean, just an example, this morning we talked about, on the morning show, we talked about how the EU thought that they were close for, figuring out a way to ban Russian oil. But the reality is they have to have 100% vote. There's 27 nations in there. All 27 people have to agree on something. I don't know. They're trying to get 27 people in the room to have 100% agreement on an issue, and it's always very, very difficult. So yeah, and then the most recent comment is, nope, not happening yet. Nowhere in sight because of different reasons. So again, commodities are a big one. I think tomorrow will be a big day for gold as well with the FOMC meeting, the notes. Again, with rising interest rates, the United States is trying to smash this inflation thing down, but again. Yeah, it's becoming a major spotlight. Actually, I had somebody yesterday. If you guys know who Ted Cruz is, he has now established like this timeline over the last 2 years of every reason why oil prices are going higher, and higher, and they predict that they can potentially get to 6. I was like, I don't want to pay $6 a gallon. That's like European prices, right? $6 a gallon. It's just crazy talk, right? Yeah, it makes you want to look at into electric cars, but then you're like, wait a second, what does my power bill look like? Oh, right at the same time. So yeah, I'm ready. Sign me up. I'm ready for the SUV that I can charge in my driveway through solar power for free. I'm good. Let me know what it costs, and I'll sign up as long as it's not the Tesla truck, because that thing is, oof, I don't know who designed it, but yeah, not for me. Yeah. So with that, let's dive right in and let's go into where is it? I gotta find my right screen here. Over here and here. Let's go into Forex Factory and start kind of pulling these off. All right. So as always, before we dive into news, let's look to see what's happening. I use this 24-hour pip change. It's one of my favorite things to use, showing you kind of what's out of whack, what's moving, what's hot. Right now, again, I would say for lack of any better reason, the yen. You could say, oh my God, the pound, look at that, it's the pound. And yes, earlier this morning, the pound was losing massive amounts of strength, again, because of this data that we're seeing right here. The UK, the flash services. You may say, well, I don't know any of that. I don't have any idea what manufacturing PMI or flash services is. Like, what are you talking about? All you need to know, and again, if you click on one of these things, you can see right here, 51.8. So 50, above 50 is considered economic expansion. Below that is considered contraction. If you've been kind of keeping up with headlines, you know what's going on. You know that the UK is even ahead of us. I mean, we're high. The UK's inflation rate year over year is 9%. They do have 4 raises in a row, 0.25. They're a little bit, they're basically where we are because they've kind of spread it out. Ours has been only 2. They're talking about maybe more, but they're already starting to see contractions. We've heard and there's been discussions about, is the Fed going to have to send us into a recession to control inflation? The UK is already bordering and teetering on that recession, right? And it's already right here getting really, really close. And they're still seeing their inflation continue to rise. And, one of the things we've warned over a long period of time right now is it's better to be precautionary than reactionary. Pretty much in everything in life. Like if you can avoid, this is why they tell you, be a defensive driver. Don't try to hone your reflexes so when someone crosses over, you can get out of the way faster. No, it's like, don't put yourself in a position where you're at higher risk, right? The Fed has done, I don't know, nothing, basically, for lack of a better word, over such a long period of time. Inflation is absolutely out of control. And now they're like, well, we're trying to make up for it, but not put us into recession. We want to have a soft landing. It's like, you could have started this a long time ago. The economy is justifying it. Earnings have justified it. Well, guess what? The UK is kind of in a bad place. And that's why we saw that movement. Now, right after that, the US, the US came in with a 53.5 in services. Also not great. It was expected to be a little bit lower, but it came in much, much lower. And again, you can see that this is a drop of about 2, right? We have one more time a drop in 2. We're right at that 50 mark. Like, is services in a recession already? We just started raising interest rates, and they said we're going to do a 0.5 next time and a 0.5 after, and we're already seeing this go to 50. Yeah, people are bringing up that R word. And again, typically when you see the indices crash, that gives strength over into the yen. And again, that's why you're seeing the dollar yen down to 123, and you're seeing the pound yen at 183. Now, again, the 183 is within the daily ATR, as well as this one actually may be pretty close. But you're seeing that the pound dollar, it's down 22. It's not really down tons. I mean, this one has about 120 pip ATR in a day. It's only moving 20 right now. Euro dollar is up, obviously, and then again, euro pound, it's about the same, again, versus, you're seeing it come back, right? But it was a pretty big move this morning, and we'll cover that in a chart. Now, later today, we do have Powell getting ready to speak just now. It is pre-recorded. I don't know that's going to be a major market mover. And then Lagarde is speaking at the World Economic Forum. Maybe, probably going to talk about something. Typically when you're at a World Economic Forum, you're going to talk about what she's probably going to talk about is inflation. She's probably going to talk about Russian oil and again get into that aspect of things. But inflation is going to be the number one driving factor, and it's not just inflation. It's also it's not just Russian oil that isn't a problem. Again, you can not drive a car, right? There are other methods to generate heat, but food is food. And food inflation is one of those things that is coming because of food scarcity into the future. So, it's going to be, there's many different reasons. India's having issues with climate change, and the Ukraine was the breadbasket for Europe, who's basically, obviously under war and gone. And, Russia has wheat, but they don't want it. Russian wheat is bad. It's dirty. They don't want it. China said they'll take it all. So I'm sure that there's going to be some comments. Could it move the euro around a little bit? Sure, absolutely. But again, World Economic Forum is going to probably talk about how inflation is the number one problem with globalization right now. And then New Zealand tonight, raising interest rates, 0.2. I'm sorry, not 0.2, 0.5 up to 2%. This is big, especially for currency traders out there. The reason why, very simply, the carry trade. It's something we haven't seen in years. It's something that is absolutely important. Oh, my buddy Bostic. He's not actually my buddy. The Fed faces considerable uncertainty as it moves forward. Yes, you could have done something a long time ago, like you kind of talked about, and then didn't do. But yeah, Bostic makes the strangest comments. I just don't understand this guy. We need to work strong. We need to work fast. 0.25, and now we're where we are with inflation rising over the last 6 months. So yeah, we need to be mindful of uncertainties and careful of tightening policy. Sure, you don't want to be the guy that is blamed for the recession, but you're okay with people paying twice but twice the price of everything else. So yeah, rich people problems, guys. Rich people problems. Tomorrow, we have some decent news. We have a couple different speeches. ECB stability report can move around a little bit. Kuroda from Japan is speaking. And again, everything we heard out of Japan is weak. Yeah. And then we got the FOMC meeting notes. Okay, so yeah, this one I'm very interested to see. We've talked about a 0.5 raise 2 times. Bostic's like, yeah, we're going to go 6 times this year at 0.25. And then they mixed it all up by going to the 0.5 aspect of it. Are we going to get anything earth-shattering? There could be some potential in here. I think they're going to stay on par for the 0.25 raise for the next 2 raises. I think they stick with that. I'm kind of interested here. Like, what does their soft landing look like? Could there be some market volatility around it? Absolutely, particularly in the indices. And the question is, are we going to be put into recession? Are we not? What do the raises actually look like, and where can we go with it? So, yeah, I hate to say that this is not a major one, but unfortunately, it's going to be. And again, I do think that we are kind of headed that direction. Then we have, obviously, New Zealand speaking again. Now, Thursday, we go big into the CAD data. CAD retail sales numbers. Now, they were very good last time. They're expected to be even better this time. As long as people are spending, again, the Fed is a bit more justified. Now, we're already seeing in the UK, who, again, is 4 raises in, they say that they are already seeing spending habits changing, okay? When you see spending habits change, that's kind of the true sign that, okay, listen, we got to start worrying, right? Because again, as people spend money, the GDP stays high, earnings are good, people are happy. As soon as people stop spending because they're worried about what could happen, everything gets, it's kind of like a self-fulfilling prophecy. Everything gets negative really, really fast. So again, just, something to watch out for. Then we have preliminary GDP. And yeah, preliminary GDP quarter over quarter. It was negative last time. We're expecting to get a minus 1.3 as well. And you're looking at this and it's like, wait a second, what? What? The GDP is going down? Yeah. Well, and again, we're not even at, they said that we were at peak inflation before, and they're like, wait a second, it's halted. Maybe it's working. Well, since that time, my gas has gone up like another 30 cents a gallon, and food costs have also gone up even higher. So, yeah, not good that the GDP is going backwards and inflation is not going any lower. So let's see. Again, if you're in the indices and you're seeing the GDP reducing, this is one of those kind of wary signs. You're like, oh God, is it going to be a red Thursday? It could. It very well could be. What if this number's worse? I mean, what if it's better? That's awesome. That'd be good for the indices. But what if this comes in at like a minus 1.5 or 1.6 or something? I mean, it could, again, typically it doesn't deviate that far, right? But you can see that there was there's some numbers in here. And again, ignore this red. The red basically means that the dollar is going to increase. Again, that's just raising the dollar. At this point, they're not cutting interest rates, so that's not even on the table. So yeah, preliminary GDP numbers. Yeah, gotta watch it. And yeah, it's funny how that is listed out that way. Unemployment claims. Okay. They're creeping higher. They're back at 1.8. Again, not also a positive thing. Even if it comes in at 160, again, right now the problem with labor is we have 11,000 job openings, but only 5 million people. What is it? We have 11 million job openings, but only 5 million people that are looking for jobs. And again, that's where kind of they keep saying that there's a demand story of things. They're blaming it on the labor market because this was their last, the labor market is tight, and that was their last problem. Typically what you would have to do to hire employees is offer more than other, wage growth would be there. We haven't quite seen the wage growth as it should be, right? So that they said that needs to come down a little bit. And then pending home sales. So this is a big one. And actually the first one, U.S. growth worries mount as housing transactions collapse. And the reason why the housing transactions collapse is very simple. You guys remember last year, right? Not even last year, like 6 months ago, right? You could refi mortgage for 2.8. I think it got down to like 2.3 at its low or something like that. Current mortgage rates up are at 6.8%. I mean, that 10-6 ARM, and again, not to get too complicated, the 10-6 ARM actually touched 7%. We're talking about 2.8, 2.5 like a year ago, and now they're at 6. Yeah, so that's, again, that would be why the housing market is starting to collapse a little bit. And again, pending home sales, seeing these numbers go down, think back to 2008 when we had the housing bubble, right? Are we getting back to that? Probably not to the same extent. And I don't think people are over leveraged like they were. But again, one of those signs when people are not buying houses, not moving, like, hey, we're going to stay put, right? That tends to be where you kind of see some problems. All right. So, oops, hold on one sec. There we go. Yeah. So that's it for Thursday. And then going into Friday, we have Bullard speaking, which again, awesome. Love this guy. He knows what he's talking about. He's participating in a panel discussion at a conference based by the Bank of Japan. Now, kind of important. Japan is, again, they're a nation that will intervene when they have to. Their currency matters. A lot going on there. But right now, again, him speaking over there could also provide some movement when he kind of foreshadows. Now, we know he's more hawkish. He was actually a little bit weakest, a little dovish last week, and that kind of threw the market into a little bit of a tizzy. But again, could provide some movement. Then we have the core PCE, and again, this is what the Fed typically looks at for PCE. Again, they're raising interest rates, and you can see here that it stays within that range. Maybe it's slowing, but we're not even remotely neutral. I mean, every month they're like, oh, we raised it. Like, oh, look, it's coming down. But again, it's building, and they're saying it's building more, and it's supposed to be exactly what it was last time, even though they raised. Not necessarily what we want to see. I mean, we're already at 40-year highs, and it's going higher, and 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 that's kind of what we're seeing. So, yeah, not necessarily what we want. And then we have revised University of Michigan consumer sentiment. Now, Friday is important. It is a holiday weekend, as you guys know. It is Memorial Day. I always screw those up, but I'm pretty sure it's Memorial Day first. I just know that it's the beginning of summer, the end of the summer. So Friday will be an odd trading day. It'll be lower volume as people try to take off early. I don't know how it is in the rest of the country, but I know on the East Coast, Thursday night, the traffic is absolutely insane. People are like, I'm getting out of here before Friday traffic. And the people that didn't leave on Thursday night, they leave at lunch so they could miss the rush hour traffic. Rush hour traffic on Friday is absolutely insane. I live about 2.5 hours from kind of the ocean, right? It is absolutely nuts. It'll be like a 16, 17-mile backup for the toll booth to go over the bridge to get to the Eastern Shore. So, yeah, lower volume on Friday. So, again, it's interesting that they snuck core PCE pricing right there on Friday into a holiday weekend. Little devious there, little devious. Let's sneak it in. No one will ever know, right? We can sneak it in and let them know that inflation is still rising, but they'll be on the way to the beach, so it won't matter. Yeah, I know that's not a lake. I guess in the middle country, lakes, right? Lakes are also popular, right? If you were landlocked, I guess not landlocked, but if you were, lake bound, maybe it's lake bound, river bound. I guess you could go in the rivers as well. So yeah. All right. Other headlines, again, things that we're seeing right now. Here's that piece. And again, if you guys want to go through it, sees basically no decision at the EU summit yet. And again, we talked about this earlier. You need all 29 or all 27 people. She didn't want to retrace, look at this. I didn't want to raise false expectations of a deal being struck next week, but I think it's appropriate. So she's like, I'm not trying to do this. We're speaking about landlocked countries, and that's the problem. Basically, a landlocked country is like, wait a second, you're going to jack our oil prices, and then we still have to rely on other people. Why would we do that? And again, very well, obviously, it is important for them to ask. Again, if they can, if they agree that they'll just pay in rubles, they can still get oil cheap versus paying twice as much, but still having to rely on other people. So it's a very hard thing. And again, getting 27 people to agree on that is pretty hard. Other big things, obviously, private sector growth slumps to its weakest since the winter of 2021. Again, UK firms. Again, it's beneficial. Oh, here you go. It's beneficial to set out terms of how to end negative rates. Right? We're clearly at a turning point. We're not in panic mode. We're in a very difficult situation, or a very different situation in the U.S. We're not behind the curve. Zing! Look at that right there. We are not behind the curve. The only reason she's saying they're not behind the curve is, again, because of Ukraine. Ukraine has helped keep it down a little bit, particularly because they've seen like that recession in Germany, and Germany's already prepared for the recession kind of thing. But yes, the United States is obviously behind the curve. We'll be at zero. We can be at zero or slightly above zero. Yeah. So again, only behind because of the Ukraine. Otherwise, they'd be in just as bad a situation. But their inflation is now starting to get out of control as well, and they're kind of preparing for the worst. I like this one today. I think this is a very interesting one. A half-point hike in July. Again, will bring European strength in. We are seeing the euro dollar up about 77 right now, and we're seeing the euro versus the pound also up a decent amount. So far, we've only seen 0.25. So coming in here with a 0.5, that's kind of a biggie, right? We haven't seen that before, right? We've only seen 0.25s in the end of the easing. And again, I think this is a positive sign for kind of getting the euro moving. And it's time. I think it is a bit overdue, right? But it is time to get it moving. The rates have been kind of, not artificially low, but again, low for a number of different reasons, I guess is the correct way to say it. Yeah, so that's where we got with the EU. And then the only other kind of bit today is, again, inflationary pressures weigh further on U.S. private sector expansion. Knowing that where we're kind of heading right now, again, these are, a number of different articles will be on this, talking about the input. This is kind of everything we talked about. 75 basis points increment is still not a bad idea. So people are still calling for it, right? We're still going to get 50, but we may get 75. I think we're going to get 50, 50, and then they're going to wait and see. Again, they should have done more earlier to try to halt a lot of this, but they didn't. So, and that's kind of it. I mean, it's beneficial to set out terms for negative. That's it. I mean, we've kind of dinged all the major ones out here. Again, Bostic is, I don't know what he's doing. I don't know what he's drinking in the water down there in Atlanta, but we have to contain inflation without causing a recession. Yet Kashkari last week mentioned that the Fed may have to send us into a recession to be able to control it. So yeah, I think that's it. Yeah, for this week, that's about it. I think the UK minimum tax deal. Yeah, euro growth was robust in May. Yep, obviously coming back with Ukraine. So yeah, that's where we are right now. Like I said, biggest mover is going to be versus the yen. So let's dive over into the chart. So first things first, let's start with the VIX. Magically, I'm going to say this a few times today because I already know what the charts look like, but magically the VIX turned right here at 1030. Again, it kind of does it in pretty much everything. But the VIX is up 4.92%, nothing to be scoffed at. It's much better than it was. It was up 7% earlier today. So again, obviously the volatility and fear index is high. People are concerned. It's like, what the heck is going on? These numbers, oh my God, what's going on? Are we going to recession? Are we not going to recession? Like, the recession is the big word. They've said that they want to try to not put us in a recession, but they haven't said yet we're not going to go into a recession. So it's kind of, they're saying that they would like to, but they can't guarantee it. So a little hard there. But again, VIX is down. Dollar continuing to deteriorate a little bit. And again, when you start to see these, anything that is considered negative, and that PMI data could be considered negative, they always start to wonder a little bit, right? You're like, okay, wait a second, hold on. How bad is negative? Well, it's bad, because we're talking about multiple raises now. It's kind of like, well, if we're already in a recession, maybe we can't raise it as much. Again, that is dollar weakness coming back in. It's back down to 101, and you can see it's pulled quite far back at this point. So it's moved. There is some buying down here, and again, this is not necessarily one of those things that we are trading, but looking back, you can see that this has been an area that it's bounced off of right around the 101.50. It is a psychological number, and if you bring this across, that's really where the next push would lead us to. Again, with Fomc, I think they're going to reaffirm, they're going to raise it. They're going to have to come up with some positive and some negative. Again, I don't know what they're going to say ahead of time, but I do know that they are going to start raising interest rates. So the market is trying to prepare for it, but there's only so much you can do. Looking at ES. So ES, we had talked about, actually, let me drop this down to a 15-minute. We talked about a Harry Potter trade, basically a break below this 38.93. Now, we actually didn't get entry for it. I guess on a 15, there could have been a case made for an entry in here. But what would concern me about this one is, it kind of came down and came right back up, came down and came up. And then really, this is right at the 1030. Entering a Harry Potter trade at 1030 when it's kind of at the bottom and it's kind of finding some buyers, not really the smartest thing, because, as we mentioned, 1030 is the magic window that we always talk about. And again, on the 30-minute, it didn't actually get an entry. It came down and pulled back up, came down and pulled back up. All three of these candles actually touched the zone. So it never gave us an entry for a Harry Potter trade. So it means we can adjust this just a little bit. We can take this more of a near term, and actually we'll put it there. We'll drop it to a 15 to get kind of the true entry from it. Yeah. There's where kind of the new basing level is. And I would say that, where this was over here, we're just going to slide it forward, because now we have a more recent basing area where people are coming in at. And that's at approximately 38.72. We know that we have buyers stepping in right around here at, right around here, which is, again, we're still in close proximity. But again, the concern about this was that 1030 reversal time frame. And again, there's the line, 1030 reverses back up again. It broke the old zone, which is fine, and kind of based off the bottom of it. But right now, this is what we're looking at. If we run the most recent low to high, right? I'm going to leave this one on. You know what? I'm going to remove it because we tagged the 61 3 times. So we'll remove this. We'll throw some fibs on, and you guys can kind of see where we're at. You can see it was kind of bouncing off that 61.8. So again, another reason why it's like, there'll be people stepping in to buy this. Yeah, it makes sense. It has broken it though, so the next time through, it looks like to be the magic number. And again, the reality of it is, once it breaks the 78, I really don't. It's not even a big concern for me. So, not as concerned about that. Let's go from the top to bottom, and you can see, look at that. There was a reversal right there, right? Level of basing, strong push down on the 15-minute, and it just happened to be a 50% retracement. So if you're in this one, which again, some of you are probably in this right now, this is a decent one. Again, it's a 12 o'clock reversal here, right there. And your 1 to 3 is right to there. So again, decent play. So basically bring it back down to the 23.6 pullback. So yeah, so there'll be some people, again, fib traders, I apologize. Those that are trying to jump into the 23.6 on the pullback, it didn't really pull back there, just sliced right through it, came all the way up and grabbed the 50. But again, it was that 1030 reversal you really needed to watch out for. And it was so close, right? It was so close. It needed a bit more. So yeah, so it's almost out of trade number 2. And again, I'd keep watching out for the 38.72. NQ. There's what we had drawn for NQ, and it's funny. We talked about the slice through 761, and it didn't really give us that base again. It really kind of came up to that original level, and then just literally it just collapsed. It was already in a sell area, so the news coming out, news today was at what, 9:45. Okay, we mentioned this was going to be a little bit more of a hard one. 9:45 is right here. Right. Actually, the 9:45 is right there. So this is another one of those ones we had pulled back into the zone. Was it a clean Harry Potter? No, not necessarily, but it was a technical sell level anyway. And as you can see, it blew down all the way through past the border. And had you taken this trade a second time, waiting for that to pull back to the zone, again, it just pulled back and done the same exact thing. So, yeah. I mean, it's in my eyes, it's going lower. I would watch out for this area though down here at, let's see, where's that area at? Just change this yellow so you guys can see it. 11,590, right? I like how there's a base here and it came down and touched those same buyers and then started to form a rally off of it. It is beyond our target to the downside, so I think it's probably decent at that point. But this is one of those ones. I mean, NQ is by far the weakest, down 275. I'd be looking for some basing, and really, I'm wondering if there's any chance of getting some kind of profit taking. It would be down much lower, and I would say that if we get enough movement down, there could be. When I say this, okay, take this with a grain of salt. If there is a end of the day rally, I would say 11,536 would be an area that I'd be looking for it to kind of bounce off of. I think either one is decent, the lower level or the one right around just a little bit higher up here at 11,600. Do I think it's going to go green on the day? No, it would take a major blockbuster news release for that one to go fully green. But again, I think there is some potential for there to be turn and bounce off of this one. Okay. But for the most part, you should already be short on this one. We've had 2 different opportunities, and again, it was there. YM. So YM, we had 2 different sell levels. Again, yesterday we had the 31.82. We talked about this on the Monday mornings. Again, this level, I've left this one yellow because, again, it's hit, base, base, hit, base, and back and forth. We still have a short down here at 31,151. I don't think we can get down there today. Again, the YM is the weakest. I'm sorry, the strongest right now. It is still down, but again, it's down barely any compared to what we're seeing in the other groups. Excuse me. Reason why is because it's more manufacturing based and it is service based, and everything else is more or less service based at this point. That's why you're seeing NQ down big, and I think actually that's on the back of what, Zoom meetings as well. So 31,151 is my target. Again, looking to take this racetrack over, pushing all the way down back into the 3,700. Got some room to go though, so like I said, just ride this one. Again, we're basically where we opened, so it's more or less flat. It's down from yesterday's close, but more or less open. There's a Russell. So again, we saw this thing kind of pull back up again, and I mentioned before, look to see what this one does with news, and the news came out at 9:45, which is right here, and all it had done is kind of really pulled back into having a basing level, and kind of opened up there. So could you have traded this one short at the open? Sure. Did the news help you? Yeah, we talked about it, and it sliced right through, and it blew through this target, right, went all the way through and grabbed buyers. Really, the buyers all the way down here is what it grabbed, and that's what it bounced off of. And magically, this one actually, all right, I won't say that this one was magic because 1030 is right. Here's your 1030 right there. So it's a little bit early. It looks like this one bounced off of that zone. Again, the red candle here was almost the bottom. It was almost the bottom, right? And then it kind of took one or two more candles. 11:15 was the true bottom before it pulled back. Now let's see. For those, let's see if some fib traders got into this guy. Nope. Maybe. Let's see. One of the things about fibs is you can draw enough lines on a chart. You're like, wait a second, I'll use this one. I'll use this one. And you can always find something in there. So that's why typically I like to keep it simple, where you're going like highs to lows. Like there's the high to low, right? Easy to draw, right? You could say, what about today's session? Okay, well, there's your today's session, high to low. And that one, yeah, I guess it bounced off to 50. It didn't quite go to the 61.8, so depending on how small of a loss a person was going to put in there for the Russell, there was a way to take that one short. And again, I think overall profit targets, if you are short, need to be back down here at 17.33 for the day. Obviously, again, not that we're trading these on Nadex, but Twitter, obviously not looking great. And once these buyers run out down here, that could be an area to get short from. You know, Apple, kind of the same thing. You know, we had to push down and found some basing, but if it blows through, we know that there was a prior gap sitting right here, which happens to be what it bounced off of. This is a second hit lower. This one could also run even potentially lower down into 134.30. Not great. Tesla, again, found an area, kind of gap past it and stabilized in it, but God knows, I mean, Tesla down at 640. You know, I wonder. This was our story last year. Remember, I was annoyed that Mr. Pelosi bought all those puts for, or all those longs for 1,000, and now it's kind of like all the way back down. It's amazing how that works out, right? Yeah, he got out when it was back over 1,000, made a couple $1 million, and now it's like, woof, now it's all the way back down to 640. So yeah, Tesla getting obliterated. Anyway, let's go over and let's cover Forex real quick. So Forex, Aussie. So we didn't really get a clean entry into the Aussie, and again, this needs to be up on a 30-minute. Again, hit it, popped in, no basing at all, hit it, pop back in again, hit it, and pop back in. There's not been a single base here. So unfortunately, there's been no really Harry Potter base trade in here, but looking to get short this one, you could have been able to take a trade off of this. Now, this is pretty ugly, right? I'm just going to say it. This is a pretty ugly chop through of this level, and we knew we had some buyers. It wasn't like a clean racetrack. It wasn't a big solid candle. There was just no entry, and all it did was really, I mean, I guess the reality of it is it came back and grabbed that level, and that's where the short came from. So, you know, it's unfortunate. Again, we're looking to get short this one. I still think this one has the potential to come down. We'll remove it because, again, there was zero entry on this trade. Yeah, right. Again, we're still messing around on that same level. So for right now, I think, again, we have two levels up top that we're looking out for. If by some chance we can get all the way back up here to 71.26, I think it's a decent area to get short from, particularly if we can rally up to there for tomorrow's FOMC, right? Confirming that, again, they're raising interest rates the next two times, that things look good, this looks bad. That should shoot us back to the downside. And on the other side, I think 70 is an important figure, but we're kind of smack in the middle. But I'd like to take this over. Not, you know, obviously it's running into these hiccups, but again, it's pushed deeper. So again, if you are short, again, target 70, actually target 70.20 and then 70 below. Aussie dollar. So we talked about kind of blowing through. We had talked about this level. It went through. It kind of gave us the retracement. Ended up going a bit higher. It's punched down. It's tagged the two targets. 90.18 was the first one. We're talking about 89 was going to be a big level. Problem with this one right now, again, I'll extend this across just so you guys can see it pretty clearly. Right there. You can see that it did come off the 50. It's done it before, right? We knew we had some buying in here, and that's all it really kind of bounced off of was that 50 level. Right there's your 50. You know, for right now, again, this is kind of a proxy through a proxy, right? We have gold involved in this one. Again, weakness. We have yen strength coming in. Again, indice proxy. There's a lot of proxies in this one. Right now, I'd look for the break of 89 and really look for that to push lower, probably even a little bit lower, but I don't like this one as much. I like the Aussie dollar. The Aussie yen for me right now is not as attractive. There's a lot more whips back and forth and strong kind of, pops. I'd say I'm bearish, right? Bearish is really the best I have because again, gold goes up, Aussie value goes down, New Zealand's raising, Aussie's not doing as much. Again, yen trying to stabilize itself. It's all the way down to 126 right now. Remember, we were talking about the world is ending at 130. It's back at 126.50. So yeah, I mean, we have continued yen strength coming in. So unfortunately for me, no real trade setup on this one. You can trade this one at night for news, but that's about all we can do. All right, so here is the euro pound. So we ended up taking some bounces, and again, this one kind of hit here, it hit here, it hit here. Again, it's surpassed any type of number of hits that we wanted to do. We got the original kind of short in this one, so that one is out. Again, you can see it's based all the way through there, so that level is out. Again, 1, 2, and 3 in close succession. 4, it is out. It did come back actually down and retest it to take off. But right now, I'm going to pull these off and again hit the 78s. I don't care about the fibs anymore in it, and we'll reverse those fibs to the top side. We'll go here and we'll go up and say okay. The 50 is really kind of what I'm looking at. The reason why is because that's really where this was, right? Here was a level of basing, right? Kind of bracketed in by the 61.8, bring it across, it went down, and at 2:30 this morning, boom. 3:30 is when we got the bad news. So magically, actually, I'm on 30 minutes. So magically, actually, this is where the second spike occurred, right? So there was 2 spikes. It's kind of like almost like they knew. But this is actually a pretty decent move in this pair. This is 108 pips. That's a lot for this year. This pair had been moving like, I don't know, 30 a day. I mean, you can see how much little movement we've gotten in there. But at this point, I would say that, again, if you're looking for a parabolic retracement on an aggressive level, there's your short. If you're looking for a little bit more conservative a level, it's kind of where we're at right now. With a break of, 85.56, there could be a racetrack here. There is kind of some buying here. And I would say that for the most part, yes, the data today was weak for the pound, but I don't think the euro overall is in a much better situation. They're saying 0.5, 0.25. We're not behind the curve, so we don't need to do a lot of interest rate rises. I think a lot of people assume that the euro had to do a lot more, but I do think there is a short coming back down, and it's just a little bit past where profit target should be. So we're kind of there, right? We're kind of there. Yeah, I'd like to see this one negative, and I think this has the ability. Let me see real quick. Let's do none. Let's do euro. Let's look at everything. Yeah, just a bunch of speeches. Just a bunch of speeches. Let me do UK. Pound. Let's see. Yeah, there's some. Germany's numbers. Consumer confidence. That could lead this to the downside. Looks like Wednesday, tomorrow morning at 2 a.m. with consumer confidence. It's a yellow mover, but again, whenever you see a consumer confidence holding lower, right, and this is kind of a, minus 25, I guess it's a little bit better, but if it comes in worse, again, that should weaken it, probably bring this one right back down again, okay? Euro yen. So euro yen was bouncing off a level. We talked about this. We'd marked it off before. We'd already gotten selling out of there. It came back up and did it and dropped further. You can see it hasn't gone back down again all the way to the 50. It's trying, and it will probably reach today. Again, we do know that we have this level where there was a pullback. Again, it was a session open pullback right here around the 50. So is there a potential for a 135.37 reversal? I would say, yeah, probably. Not necessarily a bad level. Again, it is a 50% retracement level. There is buyers there confirmed, and it was a very strong push out. In an hour and a half, it moved 94 pips over a daily ATR. It's a decent level, right? That's a decent level. So again, right now, I would say in any one of these shorts, this would be a target of 135.36. Look for a confirmation bounce and push off. Let me see. Yeah, it didn't quite make it. There were some people trying. There were some people trying this one. I was like, oh God, I gotta get a pullback, right? Yeah, it did not make it didn't make a 50 pullback, and it didn't make the 23 pullback. Both of them got stopped out. So people trying to force that one, it just didn't work out for you, fib traders. So anyway, look for a bounce. Again, target first, then potentially confirmation bounce off 135.36. Euro dollar, grinding, grinding, grinding. This one got about 2/3 of the way through before the US data came out at 9:45, and it was bad. And that's what punched it back up again. But you can see we are having some topping coming in. Again, people are going to start preparing for what Powell and the FOMC is going to say tomorrow. Again, we've seen some European data, but not really. The comments are not really moving this around. So at one point, this one had gone 1 to 1.5. 1 to 3 brings us right here. We're kind of in that level right now. So I mean, I actually don't have it up on my screen. Let me pull it up real quick. And again, don't give out trade recommendations on this channel, but I am looking at specific products to see what is remotely close. There is something remotely close that you could trade. I'll let you guys go figure it out. There's one that's not bad. Actually, there's two of them that are not bad in looking at it. It's in the right proximity, right? It's in the proximity. There are certain of the Nadex products that are more proximity based. Let me see. Hold on. Actually, let me check this other one. Can we go? Let's see. Euro dollar weekly. Let me see. I'm trying to see if there's a weekly one in here. Probably not. Nope. Nothing on a weekly basis. And unfortunately, would not be interested in trading this one on daily. It's only got 2 hours left on it. So not good. But hold on. There's still there, but there's more. Let me check this other one out real quick. Let me pull Euro dollar real fast. Let me see. Where is it? Right now. That is an interesting one. Yeah, there's something floating around. I'm just gonna throw it out here. There happens to be something here that's got, I don't know, 3 days to go on it, and it's rather cheap. For those of you that do believe that it is going to reverse, I mean, we are in a reversal lever. We do have FOMC tomorrow talking about what the raises are going to look like, and kind of how they're going to control. Again, super weak, it goes higher, but anything that's hawkish tomorrow, do we get a pullback down? 3 days to get down to this approximate level. That's only a movement of 99 pips. Can we go down 100 pips sometime from now till Friday? There could be something in this one as well. So again, no trade recommendations given, just some different, potential scenarios that are out there, for different moves. Pound yen. So pound yen, obviously this collapsed back down again, and this is kind of again, horrible services news for the UK. Let's do this again. You guys can see it again. The 51.8 is within striking distance of 50, showing a contraction. We know they have many problems out there. Not good. And then all of a sudden, when the U.S. came in with the supporting numbers as well, it crashed our indices, which also tends to bring kind of strength in there for the yen. So it's kind of a double whammy, and again, it bounced off the first level and popped. Came to the second one, which again, this one it's already hit 3 times, 1, 2, and 3. This one hit. It didn't quite do a 1 to 3 off of that one, nor would I expect it to. I do kind of expect it to break through, and we know that. Again, any break of 157.85, we got some testing here, but really we don't have any confirmed levels until this purple level down here at 157. So overall shorts to the downside, targets are down at 157.03, which is 150 pips down from where we currently are. So again, kind of on the side of this one, again, more bearish than anything else, particularly with today's data. I don't think that's the first bad data we've seen out of the UK. I was enjoying the rally back up again past 160, but as you can see, just got obliterated with news today on that call. Now, pound dollar, may say, well, wait a second, wait, this pulled back up again. You're right, it did pull back up. Now, we missed, unfortunately, this is kind of the parabolic retracement setup we were looking for, a huge smash to the downside. Unfortunately, this one had a gap over here, and there was a couple different levels. We went a little bit more conservative. There's actually a gap sitting right there, and you do have to respect gaps. As you can see, that's kind of where it found its bottom and kind of based and kind of pushed back up on. People look at this one and say, well, wait a second, look at that. Yeah, guess what? Anybody that traded the 23.6 got stopped out. Anybody that traded the 50 got stopped out. If you traded the 61.8, that one you're currently still in, right? You're currently still in. But what we've seen thus far, and again, do I disagree with this one to the downside? No, I actually think this one is not horrible. It's kind of the same thinking as the euro dollar. Why? People are going to start paying for FOMC tomorrow, what they're going to say. Now, Bostic's comments are kind of like, what? But again, 0.5, that will bring us higher, right? That will kind of move us in fast succession. And again, will bring more institutional, acquisition of the dollar in. So it should push it back down. And like I said, really, really bad news for the pound. There's no pound news to kind of counterbalance that one. It was almost a parabolic move. And again, if you did catch the bottom of this one on either of these two levels, that was a runner back up of about 80 something pips. So it was kind of a nice bottom. And again, we missed the entry by just a little tiny bit. But right now, I would say look to see this continue to roll. You will have people jumping in there. Again, a 61.8 on a an overnight high to low. That'd be a big entry area for a lot of fib traders. Unfortunately, again, kind of the same thinking. Obviously, Nadex products. It is 1 o'clock. There's only 2 hours to go, so there's not probably enough time for any of the dailies at this point. But there are other options out there besides daily contracts, and you can kind of look at those and research the money around. Dollar CAD. So dollar CAD had a nice big 10 o'clock rally, and then by 10:30 we ran out of steam and it reversed back down again. And we talked about profit targets. Again, we knew the area 127.72 was the area to go long from. We hit that area late last night and then kind of just stabilized, and this is where it's like watching paint dry. And then 9:45, boom, straight up. And again, we've already we've gone past the profit target at this point. We've reversed. I'd say the dollar CAD right now is more sideways than anything else. It is a channeling. It is more of a channeling currency pair right now. We are getting some CAD data though later this week. So again, there is the opportunity for some, something out there. We're just not quite there yet. So we're close. We're close. I think we'll get something coming in rather soon. Oops, hold on. All right. All right. Dollar Swiss. So dollar Swiss has continued to deteriorate. So we mentioned a break at 96.19. We had a kind of, again, right kind of the U.S. market, kind of like the U.S. kind of opening, not U.S. I'm sorry, the European kind of opening that 3 through 30 time frame. It kind of just peaked really fast. That's not the entry we're looking for, but typically when we do break like that, I do actually really like them as trades to go through. As you can see, it did come all the way down and touch our profit target at this point. It did go back up, and again, this is not a nice area. This is like a very ugly area. It's been so much time up there, so much time, and then popped out. That's actually where the short came in at around 7 o'clock for the rollover of the European and the end of the U.S. session. So I like to push down. I think it's decent. Again, right now, I think the Swiss has many problems out there. I do think we find a bottom in this one because I do think some dollar strength needs to come back in with FOMC. I'm curious with all this kind of negative sentiment today. Yes, the data today was bad, but again, the data the data around the FOMC meeting notes has not necessarily always. The FOMC has not done what the data has shown us. The data will say one thing and they still do what they want to do. So I still feel like they're going to be locked into this 0.5, even though the data was bad today. And if they have some type of a hawkish, it's kind of like they do the exact opposite. I feel like we have some dollar strength coming back in. 95 is kind of really where I'm looking for main buyers to come in, but I feel like we're going to get a bottom before tomorrow with this one. So, if you were in the short, nice little grab, not much else we can do with it. The dollar yen. Obviously, what we saw was, again, weak dollar, strong yen because the indices are in the red. Again, just drove this down, pure news-based move. And again, 1, 2, 3 here. 4 is actually touched, then ran it back up again. Too many hits to a zone, it blows through. We know that. Again, if we bring this down now, what it does by bringing this down lower to the low currently right now, if we draw this last high to low, we still have this level up here at 128.55. But now we do have a little bit of a level sitting right here at the 50, has been confirmed here, It is touch number 3, but again, stacking some more of these odds in your favor. 128, actually, let's change this to a different color. 128.06 is kind of what you're looking for. All right. So rolling this on the else in the currency realm, Bitcoin, you can see it's up today, but it's not really changing its trajectory. It's still right below that $30,000 mark. Again, it smashed this bottom a few times. There's a regulation story and things coming. So again, Bitcoin's not leading us anywhere. Ethereum, it's funny. They look exactly the same. Bitcoin is up 0.7, Ethereum is down 0.87. So they're kind of in the same spot, really not much movement there. Again, Doji looks exactly the same, that same kind of push down and a little bit lower, holding at 8. Now, bonds are up today. Again, indices red, Money is coming out of the risk assets, going into the secure assets, which tend to be bonds. Again, we are rallying up to an area where we have seen selling coming in. I do think, again, for any users that are traditional options traders, are not really trading this at Nadex, but again, TLT is important because seeing large amounts of money go into bonds one day, tomorrow would be a day to kind of play the reversal in this one, particularly with rising interest rates. Remember, bonds have an inverse relationship to interest rates. They're talking about, yep, we're definitely doing the 0.5. That should send bonds back lower. Again, traditional option players, you guys have, again, I mean, this is just up, 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 up. I mean, you just see how far the short has been going, and it has been pretty, pretty telltale. But it's also banking right now off that 61.8. It has touched multiple times, but I think watch out for it. If it does go higher, if it does manage to creep higher, you got a level sitting right there at 786. Going back over now, and let's go through the indices. Now, oil, yesterday we hit that 111.82. We're in that same proximity. It's down 0.28. It's not really changing trajectory too much. All the comments out of the EU saying, oh, guess what? We can't block oil. It didn't really do anything at all, right? They were talking about blocking it, and it kind of moved up a little bit, right? A little bit. And then we're not going to block it. And it kind of pulled back a little bit. It hasn't really left. It's in that same 109 area. For me right now, I'd still say 111.82 is something that, again, took a decent bounce off of it. It touched it. So again, it is a second touch, so not as strong, but at least it's confirmed. Some people like that extra confirmation coming right around that 111.82. And then we also have a racetrack over here, which in general, we feel that we can go all the way down, but it's a 1 to 8 trade. So it's quite a large, reward to risk there. I'm sorry, risk to reward. And that's a break of 107.77 coming down, potentially all the way down to 103, which would be awesome. Awesome. Again, look for the oil inventory report today, the API. And again, if you don't know what that is, search API oil inventory report. It'll come out later on today, I believe 4:30. And that kind of is the industry report on our surplus versus our deficit in oil supplies. And we'll get the real one tomorrow morning at 10 or 10:30, the EIA report, the government one, like the official one, right? Not the one that can be, not the one that has some potentially Fugazi numbers in it, right? The real one is tomorrow morning, but again, there should be some oil movement based off of that report today if it's a big miss. Natural gas. So yeah, natural gas yesterday morning, we're like, oh God, look at that. We're getting a reprieve. It's down a little bit. It's down a little bit. It did find a zone. We were looking at 777 as being an area where, again, be cautious it was going to turn. It ended up finding a new area. And again, that was the takeoff point. The cycle is down here, this drop, a 1 candle base and a takeoff. Yeah, and look at this. At 9 a.m. yesterday, it was like, wait, natural gas is cheap. All the way back up again. Now, we did bounce off the 890. Yeah, 889, it came to 890. Is this one of those ones that I would want to be shorting? And it's funny. Look at this area of interest where it wrote along the top. Answer is, you may look at this and say, hey, wait, this is a parabolic retracement move. We should be shorting the heck out of this one. Yeah, I mean, there are fundamental, seasonal changes in natural gas that you'd be looking to drop this for. But, understand once we get into the summer is when we start to do the accumulation of winter gas supplies. And it's nice that they want to cut oil off. And this is how it works. You cut, if you decide to cut oil off for Russia, then it's kind of like, well, Russia's like, okay, well, fine. Remember all the natural gas kind of things I gave you, the credits or whatever? No, we're taking those off too. If you want to hurt us, fine. We're going to, I mean, remember, for every, reaction, there's an equal and opposite reaction, right? That's just science. There'll be some type of reaction with Russia. So as much as I would love to say, oh my God, if this was like IBM, short it. This is, go, give me the Jim Cramer sell button. No. For me, not so much. I mean, you could say, hey, a second. There's an area here, Brian. There's a zone right here. We should be looking to get short this one. Yes. If it was anything else and there wasn't a geopolitical factor associated with it, then I would say yes. Do I think that this could potentially come back down and grab that 860 level? Yeah, I think it could. I mean, there's an old area here that we knew about. We were talking about that target before. Again, for me, profit taking would occur right here, which is well within that range. It's already a little bit deep. I wouldn't say get into something when it's already there, but, it's there. So just, like I said, this is the one that right now that is so linked to Russia right now. God knows what's going to happen. I just feel at any moment this could skyrocket again. And I hate to say it. I mean, if this is the top, God, I hope that I am wrong. I hope that I am wrong that this is not the top. If it's the top, I will be so excited to be wrong. I know nobody's willing to admit that, but I hope to God that I am wrong. I'm ready for back down to the fours. Bring it all the way, come all the way, come all the way back down. All the way back down to here would be awesome. Bring it, remember, used to be much lower than that. But even fours, like fours would be great. But yeah, I hope that I'm wrong. But I feel like this is not a top. But if you are in a trade, again, that's what your trade should look like this morning. Gold. So gold is popping. As you can see, we talked about kind of a small level. It had pushed this one literally to the brink when we drew it yesterday. So we're like, not the best level, and it did. It just broke. It's kind of holding up there right now. Looking on gold right now, again, we are past the 61.8. We did have a level here if we extend this across that we drew on May 9th. That's kind of what we ran into. The way that Nadex contracts work, they close at 5, reopen at 6. They kind of print the new contracts for the day. I'm kind of hoping we can hold and maintain up here. I'm actually thinking if you could find something that's a cheap entry, this could be a decent short. Again, you could do it with some of the different products. There's 3 different products you could use for it. I don't have that screen up right now because I have a different one up. But I think this is a decent short for tomorrow. I feel like we could have, again, the day before FOMC meeting notes, punching higher, going into a level. It's confirmed. We've had sellers here in the past. And again, there's a bunch of junk behind it. I mean, wherever we end today is kind of where I'd make that determination. But right now we're bouncing off and it's like, yeah, we're fighting and it's already starting to roll. I feel like we may get an opportunity to go south here. And even this old level of, old top, right? Top slice through became the bottom. We have 1, we have 2, we have 3. It's like, okay, well, that bottom shouldn't hold much longer. The next kind of big area where we have buyers that are confirmed are all the way down here. So, the question is, can we get down to 1831 tomorrow, right? That's a $30 drop. I mean, technically, if they're serious about crushing inflation, it should also crush gold. So I think this could be a decent, potentially overnight trade that you get short. And then again, look for, them to kind of filter in. The question is the market going to help move it early? And silver is kind of the same thing, right? Silver keeps coming back. It just bounced off that level up here at 22.18 again, and again, 22 seems to be kind of the inflection point for it. We're peak time, and we went crazy the day before FOMC. Could this turn and roll to the downside? I feel like it could be the same thing. So not necessarily horrible. All right. So, again, silver, I don't like as much. It doesn't have, Nadex doesn't have many product offerings. I think gold is a better play on that one. But again, I'd like to see reversals in these two, particularly with FOMC meeting notes. But again, the commodities are going to start off with the oil inventory report today, the API one that starts at 4:30. And again, look for some reversals. I think they're pretty decent. So, all right. So that's all the charts today. With that said, make sure you guys mark your calendar for next week. The last day in May, Tuesday, May 31st, we will be on. Obviously not on next Monday, but Tuesday, May 31st, 12 p.m. I told you guys if you needed it or had any questions today, email me, support right here. It's right in the middle. It's the one that's bolded. support@keeptradingsimple.com. Shoot me any questions that you have today that I didn't get to answer. And again, I will see you guys next week. Thank you so much for joining today, and I'll catch you later. Take care.